What's up, guys? So today we're gonna talk about how I lost 250 bucks in 3 hours. It's not something I'm proud of, but it's something that happens and you learn from it as you go on and as your journey progresses. You're always not gonna have wins. You're obviously gonna have losses. So just take them in. And something that I started doing is having a trading journal. So I write down why it happened or why I think it happened, what I could have done to prevent it, and how much I lost. So, in this trade, I lost 250 bucks. Like I placed two orders, one for 100, one for 150, two optional orders for Amazon. And the reason I lost was because I was impatient. Something you have to do when you trade is that you have to be patient because that's the name of the game. That's how you win a lot of money, or that's how you stay consistent and not lose all the money you invest in. So, I didn't wait. I just inputted based on what I thought instead of checking out the charts and doing the research. I mean, I had seen the charts before, but I saw it go down, and I didn't want to wait, so I just put two orders in for one for 100, one for 150, as I said. And I should have waited a little bit more for confirmation to make sure that it was going in a bearish variation, but I didn't. And as soon as I bought those contracts, probably like 40 to an hour later, Amazon was already rising again. It rose almost 50. I think it was almost like $50. So it was a pretty big loss. I could have lost way more, but good thing I don't risk more than a certain amount per trade. So if I'm very confident, I'll risk around $200. If I'm not so, I'll risk $160, $130 per trade. I usually don't take more than 2 to 3 trades per day because I don't feel confident because I have to look at a lot of numbers, a lot of charts at the same time. So I usually take one trade per day. So let's say today's Monday. I look at the chart. I look at the certain stock I'm looking for. Let's say Apple, and I'm like, all right. So tomorrow I think it's gonna go up. I wait till maybe like 30 minutes before the market closes just to get like a confirmation. I place my order. Wait till Tuesday arrives. If my trade goes good in the first 30 minutes of the market open, sell it. Or if I see that it has more potential to go up, I'll wait and then sell. Then I'll just relax for an hour or two, then go back and see another trade that I can take for the next following day, or for the remaining of how much time I have left. So now we're gonna go to the charts, and I'm gonna tell you guys what exactly I did wrong and how you guys could improve my mistakes. Alright guys, so now we're in the Amazon chart. We're in the daily time frame, as you can see. Let me put this a little bit bigger. So I placed my trade. Let's go here. I placed my trade around this point, so it was $2,340. And as soon as I placed it, it went down a little. It went down like 20 bucks. So I was like, oh, it's probably gonna go down more. So I just left it. And I think I took I want to go eat or something. I checked back and it was all the way up here. I was negative $100. I was like, well, I mean, maybe it'll go down. So I kept it. I trusted, and it just kept on going up. It formed a bullish candle and it went all the way up to 2,435, which is almost a $100 retracement, as you can see in the 4-hour time frame. So it was a big bearish candle followed by two big bullish engulfings, completely engulfed the bearish candle before it. And what I could have done better is maybe this was like I'm not sure, to be honest. It was probably in the morning, 10:30, 11 a.m. I could have waited. Wait, this is a daily. Alright, so this was the day before. My bad. I could have waited maybe to see this candle how it was gonna form out and then place my trade. But since I wasn't patient, I just placed it and it ended costing me $250. So let's say, let's take another trade that I took right here. So let's take this trade as an example. I took this trade, and what I could have done is, as you see here, there was a big break right here, meaning that price tried to break this and it couldn't, so it just went down, created a bearish candle, and I could have placed my trade right around here, and I would have caught this whole movement right here, down all the way down here, maybe sold here or here, wherever I feel most comfortable at. And that's just an example of confirmation you can use. So let's go back. It would be a big wick trying to break the area of, this is the area of resistance. But since it went all the way down and then formed the bearish engulfing, then you will be able to place a trade, because then it will just keep on going down, making a bearish pattern. Let me show you guys an idea of a bad trade. Well, obviously the one I took, but another one would be, let's see, let's take this for example. Right here, let's say you thought it was going to go down because it made this very big wick right here, bearish candle. If you had bought right here, you would have lost a lot of money, because you would have, well, if you, let's say you put $500, you would have lost the $500 because it just completely shut up after this. You should have waited for maybe this candle to form, and let's go to the 1 hour time frame. Lost it. If I'm not wrong, it was here. So you would have waited for the 1 hour time, which is probably around here, showing all these extensions back down here that wouldn't let the price drop, and it just kept going up. So you would have probably put a call instead of a put, and you would have made a ton of money. But since, let's go to the 4 hour time frame again. But since you didn't wait and you thought it was gonna go down, and you put a put, let's say you bought a put, you could have lost, and you put $500, you could have lost 500 because you didn't wait for this confirmation right here. So always wait for confirmation, always be patient with your trades. Never just do it on instinct. Just have 3 rules, let's say 3 rules that you always follow. So one would be, let's take right here, one would be a hammer. A hammer means that price try to go down, but it buyers didn't let it, so that's bullish confirmation. And here you have 3 of them. You have cross of EMAs right here. Where's the circle? You have cross of EMAs right here, meaning there's more buyers in the market. And a bullish variation. So it went from here all the way up here. So price from 1 hour is from 1 hour it went from 1906 to 1903, and the next day, not the same day after that, it shot up all the way up to 1933. You could have placed a call right here with all this confirmation with the 3 hammers, the shut up in price, and the crossover EMAs, and you would have caught this whole movement from 1935 to 1993, which is a $60 move. Depending on how much you would have invested, you would have made probably like close to 200%, maybe. And if you kept it for an extra probably week, you could have made a almost $100 movement, which would have cost like a $600%, maybe. I'm not sure about those numbers. It's just an idea. Alright, so yeah, that's just me showing you guys what not to do Always be patient, always wait for confirmation, so you don't stuff like I did and lose 250 bucks or how much you invested, let's say $10 or $1,000. It's better just to be a little patient and save those $1,000 and make profit than not wait, invest them, and then just completely lose them. If you guys really like the video, or if you guys want any other type of videos like more in depth, like risk management, or how much I risk per trade, or any of that, just let me know in the comment section below, and then I'll be sure to take a video like that. Thank you guys for watching, and then I'll see you guys in the next video. Peace.